Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, February 16th. PPI month over month came way hotter than expected, 0.7%, and we were expecting 0.4% coming from minus 0.2%. So unbelievable inflation on the producer side that is showing signs of sticky inflation. 0.7 is actually beating expectations by a lot to the bad side. Core CPI month over month 0.5%, also super higher, more than doubled what expected. 0.3% was the previous one and still continuing showing signs of increasing inflation, this time on the producer side. So let's recap. 2 days ago, CPI data showed that inflation is still super high and continues going higher. Yesterday, retail sales showing that consumer spending is still super high and showing signs of continuous. The economy is still super hot regarding consumer spending. And also today, the last piece, PPI showing inflation also on the producer side that is going to impact throughout the supply chain until it reaches us on the consumer side for next weeks and next months. So this is only showing that inflation is not under control. And what do the Fed do? What will they do? Basically, they will continue raising hikes, interest rates. Who knows at what point? Aggressively, that's what I think they need to do in order to really put under control inflation. Initial jobless claims came lower than expected. We were expecting 200,000, an increase from the previous one, lower. That's bad news. Continued jobless claims came higher than the previous one, higher than expected. That's the only piece that I think is decent. But housing starts negative. Economy, housing sector is cooling down. Core PPI year over year, way higher than expected, 5.4%. PPI general, 6%, way higher than expected. So what do you think these three pieces that we got this week regarding their fundamentals on inflation, what do you think markets should do? They should go up or they should go down? Honestly, a lot of people, after all these three readings, are expecting markets to go down. But for the third time and for almost an entire week of showing irrational support and buy-in, this is PPI. PPI news. I took advantage of this short because obviously PPI was very decent for a short because it was showing sticky inflation. But then the open, look at this channel. This trend is, this is from a technical standpoint, this is a V-shaped reversal that we almost hit to the tick. So this is a strong move from a technical standpoint, but given that we got PPI and all the other fundamentals this week, do you think it makes sense? It doesn't make any sense, let me tell you. But why this is happening? Well, you have my yesterday's video regarding options expirations on the S&P on the overall market. I'm going to recap a little bit on that. S&P 500 tomorrow has 3.5 million open interest, a lot of options that expire tomorrow. And look at this. More than 320,000 of puts at 375. Also, walls on 380, 390, 395, 400, and there's this only 418 calls. So what do you think Wall Street? Wall Street are the ones that write off all these put and call options. What do you think that they need to do in order not to pay these ones? So obviously for their best interest, they want to push the market up. Not to pay all these people. Sad face. So the max pain is 405. I think a lot of people this is not only Wall Street. I think retailers are buying like crazy. They are on FOMO, super greedy, buying all this. And Tesla is one of their favorites. So 405 would be perfect for Wall Street, but we are going even higher. And it makes no sense. But this is only for this week. Third week option expiration. Next week is going to be a different story. Once the market are allowed to go down without having all these puts, it will be very different. A very different story. So be prepared for that. Because if we check interest rates, terminal rates, 85% of analysts are expecting 25 basis points. But this is coming down from 95 or 97 one day ago. So let's do a quick recap on all these probabilities of interest rates, terminal rates. For March, okay, this is clear. May, 70% for another rate hike, 25 basis points to reach the 5%, 525. June, 50-50, but we may reach 525. And to be honest, after today's week, CPI, retail sales, and PPI, I think this is perfectly fine. This is possible. And 525, 550 throughout all these months until November, in which we are going to cut 25 basis points, and then on December stay the same or maybe cut another one. It depends on the economy, how it behaves. But imagine tech stocks, households, retail sales, all this economy that a lot of people is buying. Imagine at 525, 550 interest rates. This is going to be painful, massively painful. So there's no way tech stocks are going to be able to hold these levels. Look at this. Oh my God. Well, it's manipulation. Tech stocks are not going to be able to reach, to hold these levels. So S&P is basically stuck in these levels between 406, 415 the entire week. But remember, next week is a whole different story. When markets are able to really go down and to start a pullback, let's see the kind of risk that you may be having if you are buying these irrational moves. So from here, from the next support that we already tested, there's like 3%. The next one, the 200 moving average, 4.5% of down potential. 6% the next move, 8%. This one looks quite decent. This is 10% away to the downside. And well, if you are holding along from these levels to the low of year, prepare, because at these levels we may lose, break down, and continue lower at minus 15% from there. So what kind of risk management I'm having? A lot of people, experienced traders with patience and seeing all these manipulation are approaching the markets. How are we approaching the markets? Well, the risk to the upside, I think, is just this one. But the rest to the downside, I mean, if you are long and you get caught, prepare to back hold for weeks and months. This is just profit loss ratio, risk reward ratios of 5.20 something plus 5, 6. I mean, there's clearly a ratio that is better to the short side, but to the long side. And you have to remember that we are getting bad fundamentals for the Fed. and there's no way we are continuing higher. Anything can happen, yes, but sometimes you have to really be smart and listen to the fundamentals, and also dollar that I've already mentioned that I expect it to reach 105, and also bonds market. Bonds market started going up ballistic when we started getting signs of inflation, sticky inflation. And right now, look at this yields, the 2-year yields, and it has again potential to go to 5.4.8. 10 years is also doing the same kind of move. And bonds market are pricing in, look at this. This is September price, 5.24% of interest rates. What we saw in the table of probabilities. Bonds market, bonds traders are one of the most experienced traders trading risk. That's what they do. They trade, they manage risk. So once you see all these fundamentals and you see the kind of price action that we are getting in the stock market, you have to decide, do you listen to the stock market, which retails are FOMOing in, are going all in on Tesla, Apple, all their favorites, or are you going to listen to the bonds market traders that they are experienced trading risk? Well, for now, I will be paying attention to all these traders, all these markets that are following what I think I understand is the proper way of understanding this market. And on top of that, we have option expirations. So this is a very difficult market to understand, but what is clear to me is that I'm not going to lose to FOMO. I will wait for my opportunity and to go with my understanding and with my bias. And if that takes 2 days, 1 week, I will wait. One of the most important skills that you can have as a trader is patience. Patience is super important, but you have also to be disciplined and manage your risk. Those three are the best things you can learn for trading. And I will continue waiting until tomorrow. That's all I can do. And that's why I'm sharing this with you, because I really think we are being induced, manipulated to an extreme that it's beyond my understanding and beyond my knowledge. Why are we doing this? But there's millions and trillions of options at stake. So don't get me wrong. Follow the logic and be smart. Take a look, watch, follow those markets and try to find divergences. And I think there's a clear case or a bearish case at least next week. Let's see what happens tomorrow. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recap. I appreciate your time. Remember that the trading day is not over yet. We can see a sell-off, we can see a rip, we can see whatever, anything can happen in this market. But remember what I told you, be smart, be patient, and discipline and risk management are key for your success. Stay safe, everyone.